think, what do they say? Necessity is the mother of invention, Peter. So what have you come up with here?
That's right. And, if you're a linear thinker right now, Kelly, in this market, I think you are very, very doomed for frustration because linear thinking, just going along in a straight line and hoping all these problems are going to be solved sequentially, it just doesn't work that way. So if you're a parallel thinker, and I like to think of myself that way, we try to think of new ways to maybe put off some of the risk of some of these tech stocks. So one of the things I was thinking about is bank loan ETFs have variable rate interest payments, and they move up when the Fed moves its rates up. So what better fixed income investment than to have that moves in lockstep with Fed raising rates?
Sure.
And so to pair that against, say, a technology stock, heaven forbid right now, right? Because tech stocks have been totally pummeled, wholesale just sold down. Pair that with a tech stock that might not be as risky as most of the other tech stocks, and there you have a nice dividend-paying investment. And if you think of them as a pair, I think that you'll sleep a little bit better at night because you won't say, my gosh, I'm just invested in a tech stock. I've got a tech stock that's coupled with a rising dividend-paying ETF.
And so basically you're taking whether it's cyber, Palo Alto, Equinix, and you're pairing it with the bank loan ETF. Is that right?
That's correct, Kelly. And the reason I've picked those stocks is that I also tend to think of them as the less risky of tech stocks because they are almost like utilities now. People might stop buying houses because mortgage rates are going up, but tech officers are not going to stop paying a subscription for cybersecurity. It's just not going to happen no matter what happens with interest rates. So I thought that was less of a risk in the tech stocks, but then we also add it with a dividend paying ETF. I think that's a nice package.
Although the cybersecurity names in particular have had a rough patch, although to your point, a lot of the market has, why pick that sector at all? Why not say, okay, you got the bank loan ETF on the one hand, you can pair that with, Caterpillar, to pick a name, the energy sector, something like that, something more value oriented.
And you probably will find some people out there that are champions of value. But, I think you know me enough to know that I am a champion of tech stocks, even when interest rates are going down. I think we've had the discussion before that we won't get into the math here, but it's a complicated conclusion that people wholeheartedly conclude that when rates are going up, tech stocks are going to go down. It just isn't that case. And I picked cybersecurity simply because I think that the future revenues are much more easy to model regardless of what's going on in Shanghai, if there's a war out there, or if the supply chains are happening, in a very curious manner. We don't know how that's going to resolve. We do know that none of us is going to skimp on, say, cyber monthly payments.